Dun dun dun! Today is the day, ladies and gentlemen, that the Federal Reserve are set to cut interest rates. Now, I'm sensing a little bit of anxiety in regards to the markets and more broadly the sentiment if you're a participant in the markets on the back end of this. And it makes a lot of sense because this is the first time the Fed would have essentially lowered interest rates since 2019, of course, on the lead up to March 2020 when they had the issues with the reverse repo, when they needed liquidity. Subsequently, we got an event that gave them every reason to sort of flood the system, if you will, with liquidity. So we're going to be talking about that predominantly. We've been spending all week preparing you guys for it. The rate decision, I believe, is coming out at 7 p.m. UK time. I'm not sure what this is US, maybe about 1 p.m. US, certainly in regards to Washington. But we are going to get a definitive decision on the rate cut this evening for us in the UK. And ultimately, there's going to be really broader ramifications for the markets generally. Now, we've done a lot of groundwork in regards to suggesting that rate cuts are actually a bullish thing for the markets and not a bearish thing for the markets. And we've looked at the past 14 times the Fed has lowered interest rates for the first time and the 12-month return of the S&P over the past 14 times. 12 of them have given a positive return, only 2 being on the back end of the dot-com crash. And, of course, 2008 haven't. And we think ultimately we're on the side of the markets are going to do well. And we're going to be looking at the markets and their current positioning in regards to giving us a little bit of insight in regards or in relation to the short-term moves that we're going to see on the back end of this cut. There's a lot of anxiety, and the anxiety is really coming from, I think, we're in a good spot because both scenarios are bullish for the markets. We've covered that to death. We'll talk about the dollar. We'll talk about the dollar ramifications on markets a little bit, but we're not going to exhaust it in this video. The anxiety is really coming off the back end of 2 positive scenarios: a 25 basis point rate cut, which we think is still good, or a 50 basis point rate cut. Our opinion is that they're going to do 50. If you look at where other central banks are, barring, I think, the Bank of Australia. I think it's the Bank of Australia. They aren't as, you know, the Fed has a lot of room to cut. Some banks, like the European Bank, are already at 4%. The Fed is at, of course, 5.25 to 5.5%. And ultimately, if you look at the 2-year yields, which leads Fed funds, that's around about 4% now. So we know they've got room to cut. I ultimately think they're going to go with a 50. The anxiety, I think, is coming on the back end of if they only do a 25. And the markets are clearly expecting that 50. People would have positioned potentially accordingly. If we don't get that, there could be a bit of a wobbler in regards to the markets. But I just want to stress this. Both scenarios, certainly anything over a 50, but we're kind of ruling that out, are bullish. However, one's obviously more bullish than the other. And I want to talk about markets. There's a number of markets that I'm looking at in regards to their positioning to help us gain perhaps a little bit of insight in regards to what's going to happen tonight and after tonight. And I actually think there's going to be a very positive response. The S&P, for example, went on and put in new all-time highs yesterday. It's amazing all the bears showed up on the Japanese yen carry trade sort of unwind to say, oh, I told you, bearish. Not really, this is, basic trend following methods will help you sort of not become one of those guys. But if we look at how markets are positioning, we're going to be talking about Bitcoin and the fact that this event may start Bitcoin moving up to what we potentially have a technical target for at $84,000. Obviously, we've got broader confluence, so there's a real short-term pattern that isn't just on Bitcoin, also on the NVIDIA chart, US 100. MicroStrategy potentially is going to want to coil up out of this and continue to the upside. And then you've got the adverse of this. So you've got broader uptrends for risk and you've got broader downtrends for the dollar, which is going to ultimately drive risk. They're like a seesaw. And even on the short term, we're getting confirmation in regards to the direction of this. So I actually think today, despite the anxiety that we're all sort of feeling going into this, both scenarios, it's important to remember in the broader sort of macro landscape are bullish. One's obviously more bullish than the other. The anxiety is really coming from the 25 basis point, not the 50. And if they do a 75, the way markets are positioned, it almost looks like that might be the outcome. So it's going to be very interesting. Let's get into the markets that I'm looking at to give us that kind of alpha or insight. And then we'll look at a kind of take from Arthur Hayes, who's predicting the markets are going to crash on rate cuts. Maybe. It is certainly a possibility, certainly 25. I don't think crash is the word, but readjust. And this has been a year of readjustment on the back end of interest rate pricing. Going into this year, and we did say they weren't going to cut as zealously. They didn't need to with such a strong labour market and inflation not being where it needs to be. But now you've got the adverse of that. Inflation's kind of where it needs to be, 2.5%, and the labour market's upticking in terms of negativity. And they're going to want to goose the economy, which means ultimately goose risk assets, which means devaluing the dollar. We've spoke about the leveraging market, and then we'll be looking at a take from Ray Dalio. So today, 50 or 25, we think 50. If you look at Bitcoin, we've got lots and lots and lots of technical confluence in regards to the direction that we think Bitcoin is going. Not just Bitcoin, miners, the markets generally. You can divide Bitcoin by the markets. We've got that 130k bull flag target. We're currently in the flag. You've got the 151k inverse head and shoulders, and then you've potentially got a cup and handles that takes us to $309,000. We are again bumping up against this midpoint. This splitter has played a very key role, and we need to clear it. And I actually think today you may want to clear it. There is the potential for Bitcoin to kind of squeeze and maybe see a $84,500 price if it can clear this midline. That very much aligns with the broader technical patterns that we have. It's not just Bitcoin that could potentially be on a bit of a bullish break. It's also the likes of Nvidia. So Nvidia has really been one of those stocks that has held the stock market up. This is clearly in an uptrend. This was technically a beautiful chart for us. First target made, second target made. Ultimately, I think there's going to be, you could be looking at an Nvidia price of 184,000. Providing this plays out, I think Nvidia generally could be setting up. So it's in a clear broad trend. So you've got the trend on your side. There's lots of this setting up, which is essentially continuation like what you saw over here, for not just Nvidia, potentially Bitcoin. And Bitcoin is in a pullback in a broader uptrend, and essentially a flag-like structure is a continuation pattern that you can predict a price out of, which become very useful when you're in kind of new all-time high realms like Nvidia is, where your prior price predictions have already been made. So Nvidia, in my opinion, looks bullishly positioned. It's potentially a similar pattern with Bitcoin. Also the US 100. This looks to be doing a similar thing. Still in a very clear uptrend. Nothing has been invalidated. You can see this is Bitcoin's kind of pullback here, and we could be at this moment here. Or an equivalent pullback, if you will, to what Bitcoin's doing. As technical analysts, we really just look at the charts, and we look for things that we know have a good probability of playing out in a certain manner to play out once again. If a certain pattern, for example, a bull flag, you've got confluence in regards to being an uptrend, plays out 8 times out of 10, we'll go with that, because that puts the odds in our favor, and that's really what technical analysis is all about. But if you look at where this is, clear uptrend still, potentially a similar thing to what we're seeing on Nvidia, which makes sense, right? Because Nvidia will be baked into this, the US 100, and you're looking for that break to the upside. Nvidia showing another thing, potentially MicroStrategy again in a clear uptrend. This low wasn't even invalidated. This is just consolidation, and you're actually leaning or doing what Bitcoin kind of did, putting a toe above, very common, consolidating before continuation. See this? This might want to sort of pull itself up and out the top, and then I think, you could potentially be looking at, into the 300s easily. And then on the adverse of this, you've got the dollar, which is in a broader downtrend when the other markets are in a broader uptrend. We've got targets to the downside for the dollar for a number of reasons. Of course, this is fundamentally backed by what the Fed is going to do today, even if it's 25 or 50. And even on the short term, you're potentially consolidating and forming the kind of inverse on support of what we saw. And this may give you a downside target on the short term for 99.64. So this is the beautiful thing, right? We've got a lot of anxiety going into today's events. However, when we've looked at some of the major markets, Bitcoin right up against that sort of midpoint of this sort of broadening channel or flag-like channel that you've been in a broader uptrend, likely wanting to take it, potentially a smaller pattern in there. You've got the likes of Nvidia, which I think there's a continuation pattern for, and we're just waiting for the break of that, and that could give us higher prices. You've got the US 100 doing a similar thing. You've got MicroStrategy potentially doing the thing, and you've got the dollar, which is going to be the permissioner of all this, doing the adverse of it. And all of these patterns are in line with the broader trends these markets are in. So the anxiety, I think, is warranted. Even myself, feeling a little bit anxious. You know, we talk a big game here on Allincrypto because we can back it up. My money's well and truly where my mouth is in regards to my positioning in the cryptocurrency space. I think we're just waiting for things to come into effect. And we're on the right side of the markets generally. But, you know, uncertainty in the markets or change, you know, the markets like regime. You've got the likes of Arthur Hayes. I like Arthur. He spoke at Token 2049. I should have been there, really. And he spoke about the Fed is making a colossal mistake. Before discussing the crypto implications behind potential rate cuts, Hayes slammed the Fed for considering rate cuts amid growing US dollar issuance and increased government spending. I mean, Ray Dalio takes the opposite approach here. I don't know why he's slamming him for that. I think the Fed is making a colossal mistake by cutting rates at a time when the US government is printing and spending as much money as they ever have. This is true. In peacetime, the entrepreneur opined, adding, while I think a lot of people are looking forward to rate cuts, meaning that they think the stock market and other things are going to pump up the jam, I think they are. I think the markets are going to collapse a few days after the Fed's rates are cut. Interesting take. Ray Dalio also chiming in regards to, he gave top 5 forces shaping the global economy. One's, of course, debt, money, and economic cycles. With uncertainty still circling around the Fed, what the Fed will do at its meeting this week, Dalio raised concerns about how the country's debt will be managed. We're going to have a Fed interest rate change, and what will the whole dynamic do? What happens to all the debt? How will that be dealt with? He mused the US central bank has kept benchmark rates at their highest level in 23 years, leading to the government to allocate $1 trillion of debt servicing, an increase of 30% compared to a year ago, and this only spirals. So they've got the pressure to bring that debt down. The problem is when they lower the appeal of holding that debt, got a lot of money in money market funds, who then steps in. I think the Fed does. I think all of this is going to be what sees that dollar weakness and ultimately sees cycles sort of rinse and repeat once again. So what is the value of it, and how is, as one man's debt or another man's asset, how is its storehold of wealth? Is it a storehold of wealth? There are important questions that are pressing questions. He threw the question out to attendees. Yeah, I actually think there is a crypto element in regards to purchases of that debt potentially coming from stable coins, and the US may look to lean on stable coins to kind of help them out of this nightmare. So to really summarize, we didn't want to do anything sort of too outside of the realms of the main events of today. You've got a rate decision coming. There's anxiety around it being a 25 basis point now that markets are expecting a 50. I think both are positive for the reasons that we've spoken about. And I think when you look at certain markets like Nvidia, Bitcoin, but more so Nvidia, US 100, potentially MicroStrategy, they all look like they want to see continuation. We're just waiting for these patterns to sort of come into effect. And then when you look at the likes of the Dixie, it's in a broader downtrend. These other markets are in a broader uptrend, and we have further technical targets to the downside on a bigger time frame, and also now on a smaller, in the same way that we have bigger targets on a bigger time frame for Bitcoin and some of the risk markets, and actually they're setting up for upside on a smaller. So I think there's that seesaw going to likely play out, but we shall see. It's going to be very volatile today, guys. I think one way or the other. My best guess is that we see that real explosion to the upside. Remember, we've also called out Tesla on a number of occasions now. Don't sleep on this trade, guys. We've ultimately spoke about Tesla. We've been getting laughed at, but we think it's going to $505 and potentially even higher based on this inverse head and shoulders. We've got a number of stocks in the Patreon that we're watching in regards to miners that we think are going to do spectacularly. So that is it from me, guys. Of course, we'll be back tomorrow to report on everything. We were going to go live this evening, but a number of things have came up. I may do a video sort of from home on the back end of it, maybe sat in front of the fire or something. That's it from me, guys. Get ready for what is going to be a volatile day. We'll be here reporting on it, likely this afternoon and certainly tomorrow morning. So, thanks a lot for watching, guys. Brace yourselves, and I'll see you all in the next one.